Warren Buffett is one of the most successful investors in history, with a net worth of over $100 billion as of June 2022. He is known for his value investing philosophy, which means buying companies that show robust earnings and long-term growth potential for less than their intrinsic value. In this section, we will explore how Warren Buffett's investing philosophy and principles can be applied to the Japanese market. One of the key principles of Buffett's investing philosophy is to buy what you understand. Buffett avoids investing in companies whose business models are complex or unclear, and instead focuses on companies that have a competitive advantage in their industry, a loyal customer base, and a strong brand name. He also prefers companies that are transparent and honest with their shareholders, and that have a history of innovation and strategic decision-making. Another principle of Buffett's investing philosophy is to invest only for the long term. Buffett does not care about short-term fluctuations in the stock market, and instead looks for companies that can deliver consistent returns over many years. He also reinvests his dividends and profits back into his portfolio, compounding his wealth over time. Buffett is not afraid to hold on to his stocks even when they are undervalued by the market, as long as he believes in their intrinsic worth. A third principle of Buffett's investing philosophy is to look for undervalued quality stocks. Buffett uses various metrics to determine the intrinsic value of a company, such as its earnings power, its profit margins, its return on equity, and its economic value added. He then compares this value to the current market price of the stock, and looks for a margin of safety. Buffett believes that buying quality stocks at a discount is the best way to achieve superior returns. So how can we apply these principles to the Japanese market? One way is to look for companies that meet Buffett's criteria of quality, transparency, and long-term growth potential. Some examples of such companies are Toyota Motor Corporation, TM, the world's largest automaker by sales volume, which has a strong brand reputation, a loyal customer base, and a history of innovation and environmental sustainability. Sony Corporation, SNE, one of the leading manufacturers of consumer electronics, gaming consoles, and entertainment products, which has a diversified portfolio, a global presence, and a culture of creativity and excellence. Uniqlo Co. Ltd. FRCOF, the largest clothing retailer in Japan and Asia, which has a unique business model of offering high-quality, affordable, and functional apparel, and has expanded rapidly into overseas markets. Another way to apply Buffett's principles to the Japanese market is to look for undervalued stocks that have been overlooked or ignored by the market. Some examples of such stocks are Nintendo Co. Ltd. NTDOY, the iconic gaming company that produces popular franchises such as Mario, Zelda, and Pokémon, which has been undervalued by the market due to its conservative financial policy, its cyclical business model, and its competition from other gaming platforms. SoftBank Group Corp. SFTBY, the conglomerate that owns stakes in various technology companies such as Alibaba Group Holding Ltd. BABA Uber Technologies Inc. Uber, and WeWork Co., which has been undervalued by the market due to its high debt level, its complex structure, and its risky investments. Nippon Telegraph and Telephone Corporation, NTTYY, the largest telecommunications company in Japan and one of the largest in the world, which has been undervalued by the market due to its low growth rate, its regulatory constraints, and its exposure to natural disasters. In conclusion, Warren Buffett's investing philosophy and principles can be applied to the Japanese market by looking for quality companies that have a clear competitive advantage, a long-term growth potential, and a transparent management. Additionally, we can look for undervalued stocks that have strong fundamentals but are trading at a discount due to market inefficiencies or irrationalities. By following these principles, we can hope to invest like Warren Buffett in Japan and achieve superior returns over time. In this section, we will discuss what are the key characteristics of the best stocks to buy now in Japan, such as value, growth, quality, and moat. These characteristics are based on Warren Buffett's investing strategy, which involves identifying undervalued companies with strong potential for growth and a durable competitive advantage, and then holding on to those investments for the long term. Value investing is the process of finding stocks that are trading below their intrinsic value, which is the true worth of a company based on its assets, earnings, dividends, and future prospects. Value investors look for companies that have low price-to-earnings ratios, high dividend yields, low debt-to-equity ratios, and strong cash flows. Value investing can help investors avoid overpaying for stocks that are hyped by the market or driven by speculation. Growth investing is the process of finding stocks that have high earnings growth potential, which can translate into higher stock prices in the future. Growth investors look for companies that have high revenue growth rates, high earnings per share growth rates, high return on equity, and high profit margins. Growth investing can help investors capture the upside potential of innovative companies that are disrupting their industries or creating new markets. Quality investing is the process of finding stocks that have consistent and reliable performance, which can reduce the risk of losing money in volatile markets. Quality investors look for companies that have stable earnings growth, low earnings volatility, high return on invested capital, and low financial leverage. Quality investing can help investors avoid companies that have poor management, weak competitive positions, or unsustainable business models. Moat investing is the process of finding stocks that have a durable competitive advantage, which can protect them from competitors and maintain their profitability over time. Moat investors look for companies that have strong brand recognition, loyal customer base, network effects, economies of scale, or patents and intellectual property. Moat investing can help investors identify companies that have a long-term edge over their rivals and can generate superior returns for shareholders. Warren Buffett is one of the most successful investors of all time. He follows the value investing philosophy, which looks for companies that are undervalued based on their intrinsic worth. He also prefers companies that have a competitive advantage or a moat, which makes them difficult to replicate by competitors. He likes to buy businesses, not stocks, and hold them for the long term. In this video, we will look at some examples of Japanese companies that fit the criteria of Warren Buffett's investing style. These are companies that have strong business models, good earnings potential, and loyal customers. SoftBank is a Japanese conglomerate that owns stakes in many technology companies, such as Uber, Slack, WeWork, DoorDash, and Oyo. SoftBank is often described as the Berkshire Hathaway of tech, because it invests in a wide range of sectors and industries. SoftBank's founder and CEO, Masayoshi Son, is a visionary who has a knack for spotting future trends and opportunities. SoftBank could be considered a value investment because its share price is significantly lower than its net asset value, which is the sum of its holdings in various companies. SoftBank also has a moat in the form of its Vision Fund, which is the world's largest technology investment fund with over $100 billion in capital. The Vision Fund gives SoftBank access to some of the most innovative and disruptive startups in the world. Toyota is the world's largest automaker by sales and market capitalization. Toyota is known for its high-quality, reliable, and fuel-efficient vehicles, such as the Prius hybrid and the Corolla sedan. Toyota has a loyal customer base that values its brand reputation and service. Toyota could be considered a value investment because it trades at a low price-to-earnings ratio compared to its peers and the industry average. Toyota also has a moat in the form of its operational excellence and innovation. Toyota pioneered the lean manufacturing system, which minimizes waste and maximizes efficiency. Toyota also invests heavily in research and development, especially in areas such as electric vehicles, autonomous driving, and hydrogen fuel cells. Sony is a Japanese conglomerate that produces a variety of consumer electronics, such as TVs, cameras, headphones, and PlayStation consoles. Sony also has a strong presence in the entertainment industry, with businesses such as Sony Music, Sony Pictures, and Sony Interactive Entertainment. Sony could be considered a value investment because it has undergone a turnaround in recent years under the leadership of CEO Kenichiro Yoshida. Yoshida has focused on streamlining Sony's operations, cutting costs, and divesting non-core assets. He has also boosted Sony's profitability by emphasizing high-margin segments such as gaming and image sensors. Sony also has a moat in the form of its intellectual property and loyal fan base. Sony owns some of the most popular franchises in gaming movies, such as Spider-Man, God of War, and Uncharted. Sony also has a loyal customer base that appreciates its quality products and services. Uniqlo is a Japanese clothing retailer that specializes in casual wear. Uniqlo is known for its simple, functional, and affordable clothing, such as its fleece jackets, down coats, and heat-tech thermal wear. Uniqlo has a global presence with over 2,000 stores in 25 countries. Uniqlo could be considered a value investment because it has a low price-to-sales ratio compared to its peers and the industry average. Uniqlo also has a moat in the form of its supply chain management and product innovation. Uniqlo controls every aspect of its production process, from design to distribution. This allows Uniqlo to reduce costs, ensure quality, and respond quickly to customer demand. Uniqlo also invests in product innovation, such as developing new fabrics and technologies that enhance comfort and functionality.